When I first heard the term day trading, I pictured a Wall Street guy in a suit yelling into two phones at once. It turns out that's nothing like that, and today I'm going to break down exactly what day trading is in plain English. No jargon, no fluff, just facts. Welcome back to the Unc the Trader, where I'm documenting my real journey, learning to trade at the age of 50. If you're new here, this channel is for the 40, 50, 60-year-old group who want to learn trading without all the noise. Hit subscribe so you don't miss out on any steps of this journey. What I'm going to do really is just kind of touch on a few things today. Real brief, I'm still working on my actual platform just to get it correct. But in the interim, I wanted to basically talk about what day trading actually is. And it's simple. Buying and selling a stock within the same day. You buy at the open, you sell at the close before 4 o'clock. It's that simple. The biggest difference between day trading and regular investor or investing, which is what I'm accustomed to doing, is that as an investor you buy and you hold for years, for the long term essentially. Day traders, they are in and out real fast. They have different goals, they have different mindsets, and also you have a different tools you utilize. A typical day for a trader, I can walk you through some of it. What I'm going to do is just show you my screen. I'm going to show you how, where you pick a stock, basically the entry point and then the exit point. That's simple, just kind of give you a general idea, and then we can delve into that later into as far as other videos are concerned. So let me do that right now. Let me just pull up one of my platform that I use right now, just until I get the other one up and running. It's TraderView, and I like it because it's pretty easy to read. It's pretty simple. So yeah. All right. So let's take a look here. And again, it's not a real account. It's real, but it's not real. It's like a trading account just to practice, which is what I've done. But I wanted just to kind of show you when you enter. So again, real simple. What you try to do is you try to buy a stock. Okay, let's just hypothetically. Let's say this is Apple. You try to buy the stock. I don't know. You enter it at, let's say, $259.23, and that's an entry. Okay, and then you exit. If it goes in the direction that you look for, like in this case, we hoped that it would go up, and it did, as you can see. So then we want to, sell it at, let's say, $259.46. Again, that's just a simple understanding. What I'm going to do in the future is I'm going to have other videos where we break down what these are. These are considered candlesticks. This is the 1 minute candlestick. You have various 1 minute, 2 minutes, 3 minutes, 4 minutes, and so forth. I typically like the 5 minutes. So that's in this bar here. It's a total of 5 minutes of activity. But again, this just kind of gives you an idea of what it looks like, and this is like pretty much on all platforms, all of them. So again, that's just kind of give you a quick overview. Trading, day trading. Who's it good for? I would say it's people who have the time and the ability to watch the market during the day. People who are comfortable with making fast decisions, and people who enjoy action, because it is a lot of action. It's not good for people who can't handle stress well, people who need certainty, people who cannot monitor their stock. You don't want to buy something and you don't have the ability to sit and see if it performs the way you want to, so you can get out of it during the trading hours, that is. So that's how that works. We are going to talk about brokerage account, and the easiest thing to do to get started is you open up a brokerage account. Like I said, I have Webull, and the biggest reason I bought it is it's really good, and stuff in the charts and stuff isn't good, but I like it because it has no commissions, which obviously the more I can save, the better it is. You need some capital to start, and a willingness to learn. That's pretty much it. Okay. And then also one thing I want to point out, which we don't do, it's called the pattern day trade rule. And basically what that says is that if you do 4 or more trades within 5 days or within a week, 5 business days, in a margin account, you need to have $25,000 in your account. Now, so that's something important to know. But me, I don't trade on margin. I don't borrow money to trade. I just trade what I put in there, which in my opinion, I recommend you do that too. Obviously, until you get really good and you want to borrow money. All right, and so basically that's it. That's what I wanted to cover because, again, like I said, I'm still working on my platform before we get traded, but I just want to come back to you. If you have any questions, any concerns, just let me know. My next video, what I'm going to do is I'm going to basically compare day trading with swing trading, kind of go over that real quick. Which one fits your lifestyle, over the age of 40. So again, subscribe so that you don't miss it, and drop me a comment down below or anything that you want to see. And also, have you heard of day trading before today? Let me know where you're starting from. Okay, so where you're at in your trading journey so far. All right, and again, like I always say, let's not talk about it, let's be about it. Thank you.